Legends. Welcome back to another IGTV video. As promised, in this video, guys, we're going to be reviewing why I put so much emphasis on continuation patterns. And so if you guys are part of my full volume training course, or you guys follow along with the webinars, you guys will hear me talk a lot about, after we receive impulses, we need liquidation, or we need relief, or we need a higher low or a lower high to be formed for numerous reasons. And in this video, guys, we're going to be going over the reasons why I put so much emphasis on that fact. And so with that, guys, if you guys enjoy this video, please leave a like as well as a comment. And if you guys want me to do review any other topics, please let me know. I'm excited to be coming out with these videos, and so I hope you guys enjoy this, and let's get into it. So to start off, guys, before we can get into the main topic here of understanding why we put so much emphasis on a continuation pattern, we first have to understand the basic notion of a trend. And so if we look at a bullish trend or we look at a bearish trend, they all start off with a sharp impulse. And so regardless if we look at it from a bullish or bearish stance, they all start with 2 points, a low point and a high point. One thing you must understand is that in any basic notion of a trend and how a trend formulates, you need 4 points to come about before you can state it is a trend. If we look at this example right here from the bullish side, we can see here that we have 2 points, the low and the high. As stated, we need 4, right, legends? And on top of that, why are we stating that we need another movement to the downside or a state of liquidation for further continuation of the bullish push? Well, first, to start off, this is an impulse. And if that's the case, someone made money in this push. At some point, they're going to liquidate, which will cause some type of pullback or counter trend move. At the same time, if any of you guys understand economics and you guys understand how currencies appreciate and depreciate, it is not healthy from an economic standpoint for a currency to appreciate or depreciate for a given time without any type of liquidation or relief within the given price. You need profit taking. It needs to happen regardless of the time frame you're on, and always keep that in mind. And so going back into this, if we're stating in this impulse, someone made money and they're going to start liquidating, they're going to take profit, that's going to cause a pullback, a counter trend movement. With that, now that starts to formulate our third point, which is our higher low. And regardless of when this pulls back and when it stops, as long as it doesn't invalidate this initial bullish run, we are still good to go. And so let's say, for example's sake, we stop here. This will now, and we start to break out of this descending trend line. This will now validate to us that we are creating our third point, which we will call our higher low. And once we break out of the initial first point that created our high, that will warrant a trend has formed, creating a higher high. With this, legends, this tells us now how a basic notion of a trend comes about. We have 4 movements, which are represented by our initial 2 points of the low and the high, which started as an impulse. We stated that we needed relief, profit-taking, a state of liquidation to occur, as well as a third point to come about, creating that higher low. And the reason why we stated we needed profit taking was because someone made money in this push. They are going to liquidate at some point. At the same time, factor in the economic point that I was putting in. Currencies can't appreciate or depreciate forever. On top of that, for a trend to go about, we need 4 points: the low, the high, the higher low, and the higher high. Or if you're looking at it from a bearish perspective, a low, a high, a lower high, and a lower low. In this case, we have now formed a bullish trend. And so now you guys should understand how trends come about and how many points we need to validate a trend. Now let's go back into why I put so much emphasis on continuation patterns when we're looking at structure, after it makes an impulse, either from a bullish perspective or bearish. Now let's take a look at the 3 examples that I have here. First, legends, let's take a look at Euro-US dollar on the daily. We can see here that in this example that structure was consolidated for quite some time and was unable to break out. Now, notice though, how did this bullish trend come about? And how did it go about? Well, the bullish trend, legends, started the moment that we cracked above the range or the consolidation, creating higher highs. But notice what we were stating in the previous example. We need 4 movements to validate trend, right? So in the bullish side, we need a low, a high, higher low, and then a higher high. So let's look at this example over here. We have our low. As I stated before, every trend starts off with an impulse. Then we have our high, 2 points, right? We're not calling it a trend yet because we're just stating it's an impulse. We need 4 to call it a trend. Remember that, legends. Then notice what happens here. We pull back, right? We need a pullback. Someone made money in this push. They're going to liquidate. It's healthy. It's needed. That's where we come in and say that's relief, state of liquidation. At the same time, notice what occurs. The relief, the counter trend movement now comes to an end, and we create our third point, calling it our higher low. Now, we can only validate this as a higher low once we do, in fact, break the highs, in which we do, in fact, creating a higher high. It's telling us that now a bullish trend has, in fact, formed. And notice, legends, how in this example, just like we stated before, a trend will start with an impulse, but you need 4 movements, not 2 with just a low and a high in the bullish sides. We need a higher low and a higher high. In this example, we had a low, we had a high, we had a higher low, and we had a higher high. And then notice how the whole pattern repeats from a trend formation perspective. In this impulse here, even though we created higher highs, we have a low and we have a high. Then notice we pull back, right? Someone made money in this push, creating that higher low. And when we do, in fact, break the highs, we create higher highs, confirming to us a trend has now continued. And you guys can see how that continues all the way up. And that can be looked at on numerous perspectives on different time frames and different structures. And so that is one example. Let's take a look at the next example on pound US dollar. So you can see once again that we were range bound. And remember how we stated before, for a trend to come about, you need a sharp movement in either direction, but it's not called a trend until we do have those 4 points validated. In this example here, notice how it comes about. We do receive a sharp push. And once we did break the high, creating short-term higher highs, we can validate that this initial impulse is now telling us that a potential bullish trend is forming. We do have a low, creating our first point. And we do have a high, creating our second point. Now, once again, we are always expecting relief, a state of liquidation or relief, simply for the fact that someone made money in this push. They're going to take profits at some point. At the same time, please factor in that from an economic perspective, currencies can't just appreciate or depreciate forever. Once we make that relief and we start to break out of this counter trend or descending momentum, that starts to tell us that a potential higher low is being formed, creating that third point. And once we do, in fact, break out, creating the higher high, some would call this short-term higher high. I would call that a false break, saying that the high is still, the previous high is still holding. And once we did, in fact, break, that did create higher highs for us, telling us that a trend did, in fact, form. And once again, notice how it does come about. If you want to just look at it from this impulse, you can see here that we have a low, we have a high, 2 points once again, then we need a higher low. And then once we break out of the highs, we create a higher high, validating that a trend has definitely formed. Going back into the whole point of why I put emphasis on continuation patterns, why they're needed, and why we need to see them before we can see trend continuations. Let's take a look at the last example, legends. In this example, we're going to go off of the bearish perspective. And once again, for a trend to form, we need a sharp movement. But on top of that, we need 4 points to be created before we can state that a trend has in fact formed. Notice what happens here. We make an impulse by breaking the lows, creating lower lows, but it's not telling us that a trend has formed just yet. Remember, this is just 2 points. We have a high and we have a low. Now notice what happens next, legend. We pull back, right? Reason being we're pulling back for the most basic reason is that someone made money in this push. There's always going to be a state of liquidation or profit taking. When we pull back, that starts to create our third point, right? Starts to create our lower high. On top of that, it tells us that structure is creating a continuation pattern. It is in a state of relief or liquidation. Once we do, in fact, legends, break out of this low, it tells us a trend has formed. It has a high. It has a low. Then we have a lower high. And once we do, in fact, break the lows, it tells us that a trend has, in fact, formed, creating lower lows. And we can see once again, the same pattern happens again to validate that a trend is, in fact, continuing. We start off with the high. We start off with the low. There's your impulse. Every impulse does come a state of liquidation or relief, legends, right? There is your relief. Someone made money in that push, creating your lower high. And then from there, once we break the lows, creates lower lows, telling you a trend has in fact formed, or a trend is in fact continued. With that, legends, I hope you guys enjoyed this video. I hope you guys have a bit better of an understanding on why I put so much emphasis on continuation patterns. If you guys enjoyed this video, please leave a like as well as a comment down below. Let me know what else you guys would like to see. I hope you guys will have a wonderful week. Trade safe, guys, and I look forward to speaking to you guys all soon. I'll speak to you guys in the next video.